Hello, welcome back to the channel. So right now we're talking about inflation. Inflation is something that has been hammering us lately. I mean, it's been pounding a lot of us. I mean, lately we're seeing inflation prices at a pace never seen before in decades. In fact, according to the latest report, U.S. consumer prices jumped 6.2% in October. This is the biggest increase according to experts in 30 years. So the biggest increase that we've seen in 3 decades when it comes to the increase in price of goods and services. So you gotta be concerned about what's going on right now. And this is another report from experts. So experts are saying that, look, even though inflation was up in October, things are going to get worse before they get better. So it doesn't look like this is slowing down, and you've got to be concerned about this, because I am, if you are not. So in today's video, I'm going to be doing my best to talk about how I'm planning to position myself, or how I am positioning myself to win in this period of high inflation. So we'll be talking about what I'm actually doing right now and some tips that you could possibly follow to put yourself in the position to win and survive this high inflation period. And not just that, and also secure your finances, secure your money against this huge mess that we're going through right now when it comes to inflation. And some people have said this is transitory. We've heard that from the Fed. They say this is short-term inflation, long-term inflation, mixed opinions when it comes to this inflation. But we're going to talk about what you really need to, follow, or what you really need to know when it comes to this inflation. So the very first question that you may be wondering right now is, why is this a big deal? Why is inflation a big deal? So hang with me. I'm going to unpack this for you to really understand. So last week, the Federal Reserve Chairman Jerome Powell came out and he said, look, inflation is something that has been lasting longer than we anticipated. So he clearly made it known to the public that, look, inflation, the rate we're seeing right now is much longer than what the Fed anticipated. And some expert economists also came out after the Fed made these statements and said that even though the Fed has made this statement about the transitory or short-term inflation, the concern here is that inflation will remain elevated. So we're going to see even much higher inflation for much longer than the Feds originally expected. So you got to be paying close attention to this. Now, like we've already talked about, the CPI, the Consumer Price Index, which is what they use to measure inflation rate. So this is what the Fed and the Treasury and other experts, economists use to measure the price, the rate of inflation. So currently the CPI, which is the performance indicator when it comes to inflation, has pegged inflation at 6.2%. So inflation is currently at 6.2%. So what exactly does that mean for you? That means that if you care about preserving your wealth, if you care about maintaining and sustaining your purchasing power, you gotta watch this video till the very end to understand how you can position yourself to win during this period of high inflation. So let's jump right into it. So the very first thing you gotta understand is that there are some areas that have been hit real hard when it comes to the price of goods and services. And some of those areas include energy, shelter, food, the price of cars, the price of vehicles, new and used, and trucks. These areas have been hit the hardest when it comes to inflation. And here's a very interesting number, right? Interesting statistics. So, data, not statistics. So when it comes to the price of energy, right? The price of energy has gone up 30% in the last 12 months. And also the price of food has gone up 5.3% compared to a year ago. So this is crazy. This is the kind of number we're seeing right now when it comes to the increase of goods and services. So you gotta be concerned about this. And if you are not, I don't know what else. Because if you got money in the bank, you gotta be worried about this. If you are broke, you gotta be worried about the increase in price of goods and services. And if you've got a ton of money, you gotta be thinking right now, how do I survive this inflation? How do I position myself to win against these crazy inflationary times? So that's what we're talking about right now. So the very first thing you got to do, this is the basic thing right off the bat, right? You got to increase your income. This is the offensive way right now. This is the offense. You got to play offense, increase your income, because if you got $10,000 coming in every month, if you've got $1,000 coming in every month, just understand that that money does not have the same purchasing power that it had a year ago. And that money will not have the same purchasing power as it does today, tomorrow. So you got to understand that. And the other thing you got to do before we dig into the deeper stuff, right? The other thing you got to do is grow your money at a pace that exceeds the rate of inflation. Right? So you got to put your money in places that get you above 6.2%. That's basically what this means. If you are not making more than 6.2% on your money, I'm sorry, you are not winning in this time. So right now, we're going to talk about the low-hanging fruit. So what is the easiest stuff, the easy peasy stuff that you can implement to get yourself in the position to win against inflation? Let's talk about it. So a few items that I've researched and put together, and that's what I'm planning on doing, maybe not all of them, but just some extra tips for other people, right? Is you got to ask for a raise. You know, if you are currently earning income through exchanging your time for money, you got to basically go out there and ask for a raise, because again, let's face it, 6.2% is crazy. If you are making $100, I'm not sure how much more increase, $100 per hour or per day, you got to ask for a wage increase, because price of goods and services have gone up. And then the other thing you got to do is, you know, delay gratification. When it comes to short-term inflationary period, what you have to do is put up the large purchases. If you're planning on buying a new car or a used car, and based on what we're seeing, you may have to put up that purchase until a later period, a period in the future, to when the price of those goods and services come back to what is considered normal. And the other items that you can quickly, you know, the low-hanging fruit items that you can quickly implement include shopping off-season items. So instead of shopping for things when they're in season, shop for off-season items. That's a no-brainer, right? Because you get better deals with the off-season items. And then you got to seek out discounts, the good old discounts. You got to ask for discounts. You got to, you know, humbly and quietly ask for discounts. And most importantly, you got to renegotiate your deals. If you've got contracts like gym memberships, insurance, and other items that you are locked in on, you got to renegotiate them, especially if you are not already locked in, right? If it's variable rates, you basically got to go out there and renegotiate or negotiate not just the price, but the terms. So when it comes to the terms, if you can position yourself in a way where you can get cheaper rates or cheaper prices for a longer period of time, you've set yourself up to win, because those prices are fixed, and the price of the dollar, you know, inflation erodes that. So you are locked in at a cheaper price for a longer period. So you are winning. And then the other thing is, from an offensive standpoint, you gotta get a side hustle. If you cannot get a raise, you gotta get a side hustle. I'm not saying quit your job, keep your job, but get a side hustle to supplement the income and basically boost your disposable income, right? That's what we're talking about. Then next up here is the bold move. Before we jump into the bold move, we're digging deeper now, right? We're digging deeper. We're digging real deep to the things you gotta understand. And this is going to be quick, I promise. I'm not gonna waste your time. So these are some of the basic ways that I've basically thought about when it comes to how you can hedge yourself against inflation, how you can hedge against inflation and position yourself to win. But before we dive into this bold move, I just wanna quickly say, look, you know, this comes with some exposure to risk. So do not change your risk tolerance for any reason. Talk to your financial advisor. This is just financial education, right? So you gotta understand that you are exposing yourself to some factors that you may not be necessarily comfortable with. But the goal here is to preserve your wealth, preserve your portfolio, preserve your disposable income, and also maintain or sustain your purchasing power, your buying power. So if that's what you're out for, just hang on with me, keep watching. So this is the number one thing you got to do. The very main thing you got to do when it comes to this bold move is to get rid of cash. It's as simple as that. You got to get rid of cash. And when I say get rid of cash, I'm not saying do not have an emergency fund. Listen, I've talked about an emergency fund. I am a big fan of emergency funds. So you gotta have an emergency fund. That's the first thing you gotta do. If you don't have 3 to 6 months of your income saved up, you gotta get that figured out first before you get rid of cash. Now, once you got your emergency fund set up and going, you gotta get rid of any extra cash. And here's why. You already know inflation, 6.2%. Unless your cash is making you 6.2% or more, do not get rid of it. But if you've got stuck in a situation where you've got cash in the bank, you got to get rid of it. So what can you put that cash into? We're going to talk about what you can do. So this is something that I like to say when it comes to, or something that I've learned when it comes to putting your cash to work during this period. You got to invest in assets that basically perform well in inflationary environment. So during period like this, times like this, when the inflation rate is so high, you got to invest in assets that outperform that 6.2%. And something that I like, this is one of my favorite, right? Real estate. So during times of inflation, real estate prices tend to go up. You know, price of real estate tends to be on the high side. Things appreciate. So real estate is a good hedge against inflation. It's a really, really good hedge against inflation. And when it comes to real estate, we're going to talk about this real quick, right? So you don't have to have direct ownership. If you don't have the 20% or the thousands of dollars, tens of thousands of dollars to put down, a good way to get into real estate is to take part of that cash you got rid of and indirectly invest in securities like REITs, real estate investment trust. So that's a way to gain exposure to real estate if you cannot purchase one physically that you own and control right there and then. Then next up here is stocks. When it comes to stocks, a quick one in here is during times like this, you want to stay away from high dividend paying stocks. You pretty much want to get into stocks of everyday products, companies that produce everyday products. And these everyday products are able to pass on that rate of inflation to the consumers. So think about anything that you use on the daily, you know, your staples, that's where you want to be in. Your staple products, that's where you want to be in when it comes to stocks. Again, talk to your financial advisor. This is just how I'm positioning myself to win against inflation. Now, next up is commodities. Commodities include oil, gold, whatnot, you name it, right? So commodities, you got to get into commodities if you are looking for ways to diversify your portfolio and hedge against inflation. And one of the typical commodities or the historical commodities that comes to mind when we're talking about hedging against inflation is gold. So a lot of people historically have used gold as a hedge against inflation, but that does not mean that gold is the only commodity that you got to be paying attention to. Do your research and, you know, talk to your financial advisors and get the right financial advice that fits your financial profile. But when it comes to commodities, I just want to say you don't have to directly go out there and buy gold bars or gold coins. Now, you can definitely gain some exposure. You can buy some of these commodities through ETFs and mutual funds that specialize in these respective commodities. Now, lastly here, I want to touch upon this one. This one is not something that's very common to a lot of people, right? And this is the Treasury Inflation Protected Securities. In short, it's called TIPS. So when you hear about TIPS, these are inflation index securities that you could basically go out there and purchase through your brokerage or through the Treasury. And this will position you to stay, to keep your head above the water during this high inflationary times, to basically stay above or hedge against the inflation, the 6.2% inflation. So these are some of the quick tips that I have, and these are some of the things that if you want to just take a look into what I'm doing right now, these are some of the examples of what I'm doing or the areas or how I'm planning to win against this inflation going into 2022 and currently and beyond, right? So again, let me know your thoughts about this. If you've learned a thing or two, be sure to smash that like button and also share this video with other people to help them get this information quicker. Thank you for watching. See you in the next video.